Is AI a bubble? Yes. Who's going to lose money? Wall Street. And who wants in on crypto suddenly? Wall Street. What do you know? Why are they in such a hurry to get the Clarity Act passed? Why is Bitcoin holding up so well, given the fact that Nasdaq is shaky, Nvidia is breaking? Why is Nvidia in the news? Like, why are they breaking, and how does that help crypto? We will answer all of these questions in a very positive way because we think people are burnt out on disaster corn on the cob. They're over it. I get it. But we're going to answer these questions, and we're going to talk about crypto in a very positive light because there are guys like Raoul Pal who are doing thought leadership pieces, basically copying Toby. Toby gives you picks. We just got done with the YouTube member live stream, and we just got done filling Patriot up unleaded at the content stream. They got enough in there to keep them busy for a very long time. We are going to answer these questions. What's wrong with Nvidia and why you should move from big tech and Wall Street over to crypto now. Like, I know the 4-year cycle. I get it. Not a huge fan, but you are going to wake up one day, and this could be one day based on what's in the media, right? Toby's been saying it. We outlined it in Patreon. Toby and I did special work for Patreon, so that's in YouTube and Patreon, along with tons of written reports. But we're gonna take care of you on the market update, right? And we also want you to take a look at Alpha Intelligence. TA will be coming up. We have TA on everything: Bitcoin, Ethereum, Solana, Nasdaq, oil. We're going to be looking at it with Lux Algo and with Alpha Intelligence. So we're going to be looking at it both ways. You definitely want to stay tuned, like for the TA and for the presentation of, what's wrong with Nasdaq and basically what's right with crypto, and why is Wall Street in such a hurry to get involved. Okay. But first, we have to go through some nonsense. And that nonsense is Citadel Securities sees Warsh delivering a surprise Fed rate hike tomorrow. So, do you think somebody is short Nasdaq and has a prediction market bet on a Fed rate hike? Gee, I've never heard of that before. A hedge fund putting on a position and then going out on Bloomberg and talking their book? That seems new. Let me tell you something. Why would Warsh repeat the epic Greenspan mistake? Nobody remembers the Greenspan mistake. He takes over in 1987 from Mr. Raise Rates to 20%, Paul Volcker, wants to show what a tough guy he is and raises rates. And what happened? A bubblicious stock market that had been going straight up for 5 years crashes and goes down 25% in one day. At which point, Greenspan has to cut rates and print literally for the rest of his life. Recently passed away at age 100. The guy just, he's ran that printer until he just couldn't crank the handle anymore. That is the history of Greenspan. There's no way Warsh is repeating that mistake. Yes, Warsh cannot cut rates because everybody is running around with margin money. Everyone is borrowing money against stocks. Did you know I saw a statistic that there is $1 trillion borrowed against U.S. stocks? Of course, some kind of record. That's where inflation is coming from. The government's printing and the stock market allows people to go out and just indiscriminately shop and indiscriminately pay whatever price they want. Now, again, that's what the humans are doing, and that's nice. That's nice. But the real question is, what are the humans going to do with the machines? And frankly, what are the machines going to do on their own? Because this narrative is out there, and the narrative is moving away from legacy AI into crypto AI, which will start with Bitcoin. And in Patreon, we have a slide deck where we look at every big coin. So, Bitcoin, Chainlink, etc. And we actually articulate how they belong in the AI world. Like, what is it exactly that they do in the AI world? And no one's talking about this yet, right? The thought leadership is just coming out. We decided to talk about that or a year instead of the 4-year cycle. We paid the price, but we'll be back. Okay. And here they are, right? Here's crypto taking out Visa. 7% in efficiency push as AI reshapes work. Right. As they become increasingly irrelevant. They're irrelevant. Like, USDC and Tether, we don't need these guys. And eventually it'll be Bitcoin or WorldCoin or some other stable coin. And the reason that these places cut employees is not because AI reshapes the world or efficiency. It's because of what they have to spend on AI. That's why the job market stinks. That's why these guys are getting laid off, the tech companies. It's because of what they feel like they have to spend. They're not only spending the money that they have, but they're borrowing money. And here's a preview. And we talked about this in Patreon and the YouTube member live stream. I'm going to try to go into depth about it, about what's really going to save Bitcoin. It's not long Bitcoin short the banks. It's long Bitcoin short whoever is holding this hyperscaler debt. Like, a lot of it's being put in these like private equity funds, or these like new subprime lending funds or private credit. That's the next It might be Nasdaq, but maybe not. We'll look at the alpha intelligence, because I think if it was Nasdaq, Bitcoin would already be cascading lower. And, we looked in Patreon as to whether or not this is a repeat of 2018. So, that technical analysis report is available for the Spartans in the $25 tier. And I just wanted to remind everybody that in the YouTube member area, we do have a $4.99 plan, which gets you access to certain emojis. It's a great way to support the show for not a lot of money. So we definitely would like to have you in that plan. Lizard emojis for, the lizards that run the AI companies. Those emojis will be coming soon. So if you'd like to support the channel and you watch the show and you're not in Patreon or you're not getting our research and you have $5 a month, we would love to have your business and we would love to have your support. After all, it is a bear market and we want to make sure we're here for you when the time comes. Speaking of that, I am your host, Bill Noble. This is the Market Update. If you need a roadmap, subscribe to this channel. Turn on alerts so you know when we're going live. And of course, please hit that like button. Please hit that like button. Now, let's begin with something that people seem to forget. Bank of America predicts U.S. deficit to hit $2 trillion as annual debt interest payments reach $1 trillion. Oil's up 5% tonight because, we wanted, we were doing the peace plan of the month. And the other side said, here's a Lego video and some missiles. So I don't know who thinks this is all going away. Maybe it goes away. Maybe it's just low level and people get bored with it, like what happened in Eastern Europe. But we're going to have to continue to pay for this. And that's not really on anybody's radar. But I can tell you what is on everybody's radar is the circular financing. What's circular financing? Okay, so here is an example of how money is moving around where, Oracle gives OpenAI money, OpenAI gives Oracle stock, and then OpenAI takes the money and buys services from Oracle. There was recently one of these developments with, Nvidia did it again. They did it again. Nvidia went down and they crashed Kospi. Kospi is the Korean stock index that's heavily weighted with two big semiconductor companies, one of which is Samsung. Just absolutely wrecked it. And you should have known this was coming when the CEO of Nvidia got on Twitter. You should have known, because he has to try and shape the narrative, because, this type of accounting and this type of stuff is not going to stop, because the companies themselves will be fine. They have earnings. They can make money. Even if they go negative free cash flow, it's frankly, it's temporary, and they don't care, because they have to win at this. Who's going to get hosed? The people holding all this debt. Like, they're borrowing money, and they're burning cash. And eventually, no one's going to want the debt. No one's going to want the debt. Now, that'll impact the stocks. It's already impacting the stocks. People are going, what is this? Can this blow up? Oh, yeah. It can definitely blow up. In other words, can financing dry up? I don't know. You know what? Ask Michael Saylor. Michael Saylor and Hyperscalers really are doing the same thing. Michael Saylor is borrowing money to buy assets that he thinks is the future. All these hyperscalers and the semiconductor companies, they're borrowing money like crazy to buy assets that they think are going to be the future, which is like data centers, so they can run their software and their AI. Now, it's so funny, as I think of it, that everyone is giving Michael Saylor a hard time. Like, seriously, you have to line up. I have short MicroStrategy. It's going to blow up. All of his metrics are fake. You know what I'm saying? It's just crazy how they were after Michael Saylor. But it's funny that all this stuff that these hyperscalers are investing in, they're buying all this stuff. They're buying all these chips. They don't know if they have the energy yet. But the chips and the stuff that they're building are going to be obsolete in 4 to 6 years. So in 4 to 6 years, they're going to have to buy all new stuff. Meanwhile, you have to ask, what kind of returns are they going to get when they have to sign 15-year leases for land and 20-year power contracts? They have to sign deals, and we're going to go into it, but they got to sign deals and have long-term expenses, and they don't know when and where the revenue is going to come in. It'll eventually come in. But are they going to have financing pressure the way Michael Saylor did? In other words, are their stocks going to be going down, or is the whole AI trade going to move lower? And are they going to need more money if it goes lower? Just like Michael Saylor might have to sell Bitcoin, or Michael Saylor might have to issue more stock or borrow more money. And oh my God, oh my God, oh my God. That's a drop in the bucket compared to these other characters. Now, I'm telling you about this, not as disaster corn on the cob, but the value proposition of crypto is starting to show up, right? People are going, hey, you know what? Maybe we should be talking about crypto. Like Raoul Paul is out big, like where crypto fits in the exponential age. So we're going to go into that. I actually mixed that up with Wall Street, right, as a way of driving home that as soon as the hyperscalers have a problem, crypto and the narrative around crypto can move beyond what's going on Robinhood. Just in case you're wondering what's going on Robinhood, it's another meme coin type casino thing. People are bored. I get it. But that's also another lizard trick to suck retail capital out of the market before they come in and get the Clarity Act and just start hoovering up all of these assets, all of the big ones. Like, and you know who's in the know about it? I didn't realize this until I saw this. I got this from my friend Andy. Ripple bought a bank in pieces. Here is the $4 billion audit. Okay. While the market watched the token, the company spent $4 billion assembling what it was never granted: custody, prime brokerage, corporate treasury, and payment rails, acquisition by acquisition. This is the audit of what the money bought, what it earns, and the uncomfortable question the empire answers about XRP. Okay. So it's very popular with XRP at $1 to come out and say Ripple's useless and no one's ever going to use it. No person may use it, but a machine might. Who's talking about that? Well, we are in the YouTube member area, along with all the other coins the machines are going to use. Okay. But, you know, I have no doubt that Wall Street wants in on this Clarity Act so bad. They're all on the tape. Schwab, Franklin Templeton, Goldman, everybody is on the tape saying, pass the Clarity Act. Because the crypto bus is leaving and they're not on it. And if they're not on it, they have no shot at control and no shot at dominating. Because that's what they want to do. We'll get into that. But that narrative is out there, right? I think whatever's going on with Nvidia is like, for any old people out there, it's like the moment in Rocky IV where Rocky hit Ivan Drago and cut him over the eye, right? So the invincible fighter took a shot and, you know, when he got the cut over the eye, you know, the fight turned, the momentum turned, and, you know, that's when the underdog, you know, advanced. This thing with Nvidia, this thing with circular financing and Nasdaq just kind of, you know, slumping, people losing interest. We'll go over to TA. If Bitcoin could just hold, and we went over the probabilities in Patreon, right, about in the TA report, the probabilities that Bitcoin holds and does not make a new low. We talked about it. All right. And just in case you're wondering, you know, along with the government debt and the other case for crypto, how total surveillance conquered the last sanctuary of human privacy. Anybody, and it's amazing how, like, you know, the Zcash narrative, the Monero narrative, the John M narrative, no one cares. And we went over all these different things that machines are going to need to do transactions along with humans, layers of privacy beyond. I'm not telling you what the categories are that no one's talking about. And they will be talking about it. And when they are, it'll be after they go up 200% or more. It's just that, you know, we're super early, okay, on the Clarity Act. And then we're going to go to PowerPoint. BlackRock, Fidelity, and other Wall Street giants back the Clarity Act. SoFi, BlackRock, Fidelity, Franklin Templeton, and Goldman. And the Senate is holding it up over a meme coin. You know, they're going to hold up the future of finance over a politician engaging in accidental or purposeful grift, insider-ish trading, marketing, whatever. Like, that's new. I mean, that was a big one. You know, everybody sold over he sold over the top of everybody. Zero judgment. Wall Street wants it. Just like they wanted the BlackRock Bitcoin, the Bitcoin ETF, they're going to get it. The bid in ETH is a reflection of the fact that they're going to get it. They're going to get what they want. And I don't think that's priced in, like, at all. At all. Now, what the market is starting to figure out is that Bitcoin and crypto do not have the problems that these hyperscalers have. $725 billion, up 77% in 1 year, and another $1 trillion predicted next year, running with borrowed money. You know, they're spending, you know, at 3x, you know, what the depreciation is on their income statement, which means they're buying stuff that's going to depreciate rapidly. $200 billion in private credit, $800 billion more. Private credit equals sludge debt, which is why Michael Burry is back trying to get short this, because the private credit could be the next 2008. I think that sends Bitcoin to the moon, believe it or not. Okay. Amazon projected free cash flow this year is negative. I think that story is actually overdone. Who cares? It's not the first time people borrowed a bunch of money to get involved in a new industry. Who cares? What matters is the quality of the debt. Can they repay it? And can they get more credit if they need it? That's the problem. It's like, is this borrowing indefinite? So here's, nobody can stop it, even if returns disappoint. Rivals build, you must build. Everyone adds, prices fall, returns shrink, and no one slows down. Okay. Some of the demand is circular. Chip makers invest in AI labs. Labs commit to buy compute. Valuation rises. Everybody borrows more. Just like, Michael Saylor borrows, Bitcoin goes up. He borrows more, buys more Bitcoin. And that's how it works on the way up. And then on the way down, it's the opposite. These characters are doing it more, and they are doing it much bigger. Okay. Economics 101, costs are contracts. Revenue is hope. Put in 20 million, borrow 80 million. Build a $100 million data center. If it's worth just 10% less, the lender still gets the 80 million and half your equity is gone. Right? In other words, it doesn't take much for a data center to lose value because chips are old or whatever. So this is the math that's driving all this weirdness in AI. And this matters for crypto. I mean, this is it, people. This is the Bitcoin standard. No one cares about government debt. They should, right? No one cares about anything. It doesn't matter until it does. And guess what? I think it matters now. Now, does that mean it's already been traded in Nasdaq? Possibly, right? Maybe when it shows up on Zero Hedge, it's over. But in 2008, it was houses. Now it's data centers and GPU. House prices only go up. Compute demand is infinite. Subprime mortgages, GPU-backed loans, right? Like people are borrowing money against compute and people are borrowing money against chips. Chips as collateral. Okay. Data center debt deals is the new toxic asset, or the collateral, the CDO, collateralized debt obligations, small bad loans packaged together. Shadow banks from 2008 is private credit funds today. One way it's worse, a house will last 50 years. The GPU and the data centers have a 4 to 6 year life. Who's holding the bag? Bondholders, paid last, informed lease, debt hidden in private credit funds, backed by melting chips. Oracle bondholders are already suing. Data center under-earns, credit funds marked down, banks and insurers hit, and then eventually it hits 401ks and retirements. Don't forget, J. Cook and Company in 1873, the company that financed the Union in the Civil War and that financed the Northern Pacific Railroad, blew up in September of 1873, and they had to close the stock market for 10 days, and they had a 5-year depression when railroads blew up. The same thing. Everybody building the same thing, everybody building the route to the same place, and when it blew up, there was no way to pay anybody. So the capital went out there, but it didn't come back because all the capital that went out there couldn't capture a return. So it's not that these companies are not going to make money, but everybody's bonds are not good and the borrowing is infinite. The demand for the money is infinite. Therefore, the quality of these bonds, as supply rises, prices fall, interest rates go up, and it becomes harder and harder. And one day the bond market's going to look at one of these guys and say, no. And that could be the epic trade. That could be the thing in September. That could be the thing that bottoms the crypto market. It's when these guys wake up and all of a sudden, boom, everybody goes, you know what? There's something wrong with this. And it doesn't have to be a disaster. It doesn't. It does not have to be a disaster. It has to be just, wait a minute, like this. I like this. There's no lizards. Skynet, right? OpenAI caught one of its AI agents leaving instructions for future versions to escape internal controls. Okay, so that's great marketing. You know, everyone's like, oh, yeah, we have Skynet and it escaped. Okay, can you believe it? Probably. I think if it was actually true, you wouldn't hear about it. Like, this feels like marketing. But the lizards have got the software to run Skynet. They just don't have the hardware, which is why there's indiscriminate spending. And all you need is one oopsie daisy, one Oracle or another Oracle or Oracle Part 2, where somebody really kind of blows up, or some bank or some private credit fund that's holding the bag on all this debt blows up. And then all of a sudden, everybody goes, you know what? We want to move to crypto. Like, we've been talking about the projects related to this in the YouTube member area till we're blue in the face. Like, seriously, I mean, it's like our members could probably like rattle off the projects that we've been talking about incessantly. Morpho was a project we were talking about, and that was up like 400% this week out of nowhere, right? And that's the way this is going to be. But people need to understand the cracks in this AI-related system and essentially what happens when everybody wakes up. And I can tell you what happens when everybody wakes up. Moving to like the positive thing, where does crypto fit in the exponential age, and who's trying to own it? Okay, who is trying to own it? The math of Raoul Paul's mistake. He bought a bunch of Bitcoin, sold it, made a ton of money in 2013. And if he zoomed out, removed the noise, and held the position, it'd be worth 9 figures today. Being right about where crypto ends up is worthless if you can't sit through the ride. Okay? The problem crypto solves, your cash is melting. Aging populations, governments borrow more money, debt forces more printing, cash loses 8% per year. Demographic drives debt, and debt drives debasement. The rational response, own things that cannot be printed. The same debasement engine is funding the AI buildout from the AI margin call. There is your argument for Bitcoin. Where are you hearing this? Well, you're hearing it from Raoul Paul now, and then eventually somebody other than us will start attaching crypto projects that help with this, and everybody will go, wow, that's total genius. I never thought of it that way. Sorry for the Bitter Men's Club. It's okay. I'm fine. Okay. The vault is real. It works, and it's worth owning. The vault is only half the story. A store of value is capped by the savings pool. Big number, but a fixed ceiling. So Bitcoin solves storage, not programmable, but it's not everything. So programmable money and smart contracts, Ethereum, Solana, and of course, PAL is sponsored by SUI. Complete for economic activity and the rails. The vault holds your savings. The rails carry the economy. Now we got people talking about rails. Toby talked about rails. I didn't even understand what she was talking about. Now the big guys are talking about it, right? And all you need is a blow up in private credit before someone goes, you know, what does Aave do? What can you do on Ethereum related to finance? Okay, the machine economy needs rails that banks can't provide. AI, robotics, and energy over here on the left, and crypto hit the steep part of their curves all at once. Billions of AI agents transacting constantly at machine speed. Banks can't do this with 3-day settlement. Why do you think the banks want in? The banks know the machines are coming. What? The banks in Silicon Valley don't know, the banks don't know what the lizards in San Francisco are building and what they have. Really? They're doing billions and billions and billions of debt deals. How are they getting those deals done? Well, it's easy. They go in, The lizards show up with the demo of ChatGPT 10, and they go, yeah, we'd like to borrow a bunch of money. And Wall Street goes, absolutely, here you go. So they know what's coming. They know what's coming. $850 trillion would have to go on chain. 400 trillion real estate, equities 125 trillion. Like the numbers are all ridiculous. Okay. Low fees aren't low value. Cheap rails are what makes rails usable at scale. Solana, that's probably his SUI pitch. Okay, Ethereum, hello, ETH BTC. Okay, where's ETH BTC? Is anyone even paying attention to this? Now, it's at a 5-wave top. This is the 1-hour chart. Okay, so, no one get too excited. Nothing outperforms forever, but ETH's been going straight up into the Clarity Act vote. It'll pass, and, they'll sell ETH or they'll take profits or whatever. And that's probably a dip buying opportunity. So is this stupid thing with oil, most likely. I talked myself into irrelevancy by focusing too much on oil. I should have been focused on Ethereum. It's not a business. It's the ground businesses stand on. Rails, infrastructure. That's what it means. Like the frame of the Empire State Building in the 30s. Okay. Switch Ethereum off and you lose every layer 2, right? It's not happening. The layer 2s compound the layer 1s. They pay rent essentially. The layer 2 still pays the L1 fees, just in a more efficient way. Building on Ethereum compounds Ethereum. You don't value an economy like Ethereum like a company at the bottom here. You value it by the activity inside of it. So if we just have to put $850 trillion online, that's not going to go on Ethereum and Solana? So why is everyone bearish? Well, October 10th, Binance crash, blow up. The government shutdown chaos pushed the crypto payoff past everyone's schedule. In other words, the trade is so obvious that the pain is the waiting. And it's the waiting after a 50% correction. Okay. Nothing in the process has broken. The thesis isn't dead. Ironically, it's late. So you know how they say you're early? You're early and late. The payoff is late. The investments were early. You thought you were on time with the new era, and there's a delay. And you just need one little hiccup in legacy for people to go, let's write about crypto. Like, I'm going to borrow this from Toby. Toby says it all doesn't have to blow up in legacy for something good to happen in crypto. And that's what's happening now, I think, as we speak. Honestly, the cycle has already turned. Economic activity is going up. This is Raoul Paul's thing. I mean, he's always got to have a graph. So first it was money supply versus Bitcoin. That didn't work. Now he brought back industrial activity, or ISM. So data centers, building is expanding. Normally that's good for crypto. Crypto tracks global liquidity. The Fed is still printing, by the way. This whole thing about higher rates, crazy. Now, enter Wall Street. Here we go. Why do these guys want the Clarity Act? This is why crypto's going up. This is why crypto's going up a lot eventually. This is why I don't believe in 40K. What I believe is in Patreon, but I don't believe in 40K. So here's what Wall Street did. First, they banned it. Then they dismissed it. Then they studied it. Then they wrapped themselves around it. Now they want to custody it. Like, why does Schwab want crypto? Because they want crypto custody. They want to custody your crypto. And then what they want to do is they want to regulate it so that they're the gatekeepers of crypto. The word I use is they want to undecentralize it. This is why they want the Clarity Act, so they can own the rails. So this $850 trillion that's going on chain, BlackRock wants to own it. Schwab wants to own it. Goldman wants to dominate. Why do you think, and I said this, why do you think Goldman was the first one out there with this? Right? That's the coup. They're not killing crypto, they're capturing it. Right? Don't just watch what they're buying, watch what they're building. Wrap it, custody it. ETF and funds mean you own a paper claim on crypto. Convenience traded for control. Qualified custodian. Rules cluster the actual keys at a handful of giant firms. F you and the horse you rode in on. F you. Everyone's like, oh, the Clarity Act is so wonderful. Okay. Yeah, the Clarity Act is good. It'll be great for ETH and Solana. But listen. Don't believe. Have you ever met, let me ask you something. Have you ever met an altruistic lizard or an altruistic Terminator? Like, I guess there was a good Terminator. Arnold Schwarzenegger was a good Terminator. Okay, that was one. How many good Terminators did Skynet have? A lot. Right? Lizards, monsters, people who mean you harm. Google a speech by the head of research at Anthropic. See if you can look at the person without throwing up and see if the person doesn't just scare you by saying, really, AI is actually kind of human. Yeah, I'm sure Anthropic version 10 is very human. Is it a good human or a bad human? Are they interested in your well-being? I don't think so. Why do you think they want to capture it? They want to capture it because they want to make your well-being their well-being. Why is crypto going up? Because in order to get control, they have to indiscriminately buy it. This is kind of the payoff of listening to me for 56 minutes or however long I've been on. They have to control it. And how can they control it if they don't own it? They don't own it. Right? I mean, I think in some ways, you know, these Bitcoin treasury companies that got all this financing to do nothing more than copy Michael Saylor. Yeah. Where'd they get all the money from? From Wall Street. And if they default, Wall Street gets all their Bitcoin. But like Wall Street wants to control Bitcoin and sees, you know, there was the innovator, there was the imitator, and then Wall Street saw the idiot coming from a mile away. Oh, yeah, dude, we'll lend you all the money you need. Go out and buy Bitcoin, and then we'll hammer it down and keep it down so that we think everyone is bearish and it's all over and it's going to 40K and it's not going to bottom and it'll bottom in October maybe, but it really won't rally until when, whatever. Right? That is absolute mind control because they want to custody your crypto. And how are they going to custody your crypto if you have no crypto? Like, don't you get it? Like, no one's long. Who's going to get long? They are. That's the first people who are going to get long because they're going to profit when everyone else comes in and gets long. Think of Robinhood, $850 trillion. Just a rough number. Go with 30 trillion, right? I mean, who's going to pour into crypto? Everybody. Why do you think they want to control custody? It's not just the Bitcoin ETF. That's just like, you know, that's a wrapper. That's the warm up. Now, what they don't realize is they can try to custody everyone's crypto, but are you going to give your crypto to a lizard? Are you? Or are you going to say, you know what? I think I want my sovereignty. I mean, you know, you can go into discussions about politics, privacy, surveillance cameras, or we can go on and on and on and on about disaster corn. Who cares? They want it because you want it. And you know what they want to do? They want to put a moat around it. They want to have compliance. Yeah, you're hearing me correctly. They want regulators to come in and say what you can and cannot do with crypto. It's called undecentralizing. So once the Clarity Act gets passed, which everybody thinks is so wonderful, it's fine. Okay. But Wall Street wants to get crypto and build, they want to develop rules that benefit them. And then they want to build a moat around it so that like crypto is controlled by them, not you. And I think the rebellion is price. The rebellion is price. In other words, make it expensive for them to get in and make it easy for you to go on Phantom or Solana or ETH or Uniswap, whatever, for you to go in a decentralized world, hopefully before the machines get there, because once the machines show up, they're going to be moving at light speed. They're going to move when you're asleep. Trust me. They're going to work 24 hours a day. Everyone's like, crypto is so boring. And then it's going to be like, you know, I can't take any more medicine to stay awake. You know, Red Bull's rotted out my insides because I can't keep up with the machine because I'm trying to get long when the time to get long is now, which is what we're beating the drum about in the YouTube member area and in Patreon. It's like now. Buy it when everyone hates it, because when everyone likes it and everyone is a machine, forget about it. Forget about it, right? I mean, can Wall Street really control what you and the machines do with a parabolic crypto market? They want to get involved before it gets out of hand, and it is going to get out of hand. Like Robinhood is the boredom-based warm-up. Somebody was asking me in the YouTube member area what I think about Robinhood. It's the boredom-based warm-up for the thing that Wall Street is afraid of. You know, and just on the Clarity Act, 70 Democrats have crossed over to try to vote for this thing. It's stalled because people are giving the orange man a hard time about his meme coin. And that's why Wall Street is on the tape going, hey, guys, Nasdaq is cracking. The bus is leaving. The bus is leaving for the alternative system. And ironically, at this point, the SEC is more crypto friendly than Congress. And they'll stay crypto friendly. They'll pass every rule in the book that will allow institutions to pour in and do everything they can with crypto when crypto is really a Trojan horse to disrupt them. They're going to invite their own demise or their own, I don't know, diminished utility in right through the front door. What's being fought over in crypto is what is the center of power. So if you zoom out, 50% of drawdowns are typical, right? Bitcoin is 50% off its high. They are the price of the parabolic curve, not proof it broke. That's Raul Paul. Don't try to time it. I mean, yeah, we're going to try to time it, but don't get upset if it happens now or we have to wait for this 4-year cycle thing. I mean, you want to talk about green in the gills? Benjamin Cohen with the 4-year cycle is picking up 10,000 followers a day. So in the middle of the biggest trade in history, when the machines hit crypto rails, that's right, I said the biggest trade in history, we're listening to a 4-year cycle guy for research who is looking for some kind of capitulative disaster, and we're effing around on Robinhood. How funny will that be in retrospect? In other words, instead of a climactic heave, maybe the end of the bear market is just everyone flocking to Robinhood to be stupid, while Wall Street pulls the rug out from under us, while, you know, the wolf dressed as Little Red Riding Hood knocks on the door and goes, hey, hi, let me in. I'm the big bad wolf. Watch the real signals. ISM, liquidity, the Fed. Watch this guy from the Fed come out and say, you know what? I really don't see any need to hike rates. I can't do anything about oil. NASDAQ is down. I can't stop the data center thing. The data center thing is going to stop itself because they're going to get over leveraged. What? He's going to hike rates, blow up Nasdaq and hyperscaler debt with Sam Altman at the White House chit-chatting, right? Oh yeah. The Fed's going to push the button and just, you have lizard parts flying everywhere. No way. Absolutely not. Absolutely not. Absolutely not. Liquidity is not going to wait for the Senate. The cycle and the rising tide of the economics and the liquidity that fuel Bitcoin is already in motion. In other words, who cares about the Clarity Act, or who cares when they pass it? Like, they'll pass it, then they'll do the sell the fact rally, which I'm so bored with it. I'm bored with the concept of it, right? This hidden reality of the machines coming into crypto is happening. It's happening. It's forming. And basically, we're ignoring it. Or we're absorbed, or we're caught in a disaster corn scenario where everything is negative when everything isn't negative, right? Like, for example, a combination of alpha intelligence and Lux Algo. So this is a 1 hour chart of Bitcoin that is practically a clinic, okay, on how to use alpha intelligence for pivot points with Lux Algo. So one thing I notice is that these blue triangles come from alpha intelligence. So that's like their version of buy signals based on their volume analysis. And what I've noticed is, if you move past, if it's trying to catch a low, frequently you get, like, they run the stops. This is them trying to get your money, right? But it actually winds up bottoming on a big wick right on the bottom of a Lux Algo triangle. So the QR code for this is down below. If you have Lux Algo, this is like, I'm using them together now because they're like pivot points. And then it makes this big wick down and comes back into the 1 hour discount zone. This gives you increased confidence, and then boom, and now it's attacking the top of the triangle, and we'll see, right? ETH versus Bitcoin. Really kind of funny that this sell signal, when they don't work, it goes kind of straight up. I mean, I know this is not huge on a 1 hour chart, but it's really interesting. And then what's even more interesting is that if you look at Nasdaq, right now, Nasdaq has got one of these buy signals on a daily chart, which, you don't get a lot of these from just looking around in alpha intelligence. The last time you got one in Nasdaq popped up and made a new high. Okay. This time, Nasdaq seems to be either running the stops into this volume area or it's failing. We'll see, right? I mean, typically, they always run the stops with these things. You get the signal, they run the stops. Then you see Lux Algo is inserting resistance. Somewhere in here, there could be another oracle. I think this diamond is bearish. The downside target is either this distance projected downward, like we're almost there, or it's this distance, this much bigger move. In Patreon, we had kind of a surprising conclusion of where we think it's going. This would be a 10% drop. I think it would take an insane move by Warsh to get it there. This thing with oil, again, nothing. This looks like P&L destruction. And Toby had some things to say about oil, and it's right here on the chart. Here's a pivot point, down. Here's a pivot point, down. Bottom into the discount zone. Lux Algo buy signal, boom, the other way. Look at the selling volume. Every time there's a cessation in hostilities, look at the sell volume in this oil contract. It's like they pump it so they can dump it. That's what it's, I mean, you've seen this twice now, and then there's a Lego video that comes out, and then, a base gets hit in Jordan. It's almost like I'm starting to feel like it's manufactured fear. I got all caught up in this, oil going to 100, oil going to 200. For what? Am I just eating what they're trying to feed me? Just like, there's this big negative crypto story. I just think they're all wrong. The Clarity Act and their position on the Clarity Act, combined with the funny money in the AI business, can turn crypto. Obviously, a 10% down move in Nasdaq would not be good initially. The realization is coming. Like ETH on a 1-hour chart, making a nice triangle. ETH pops out of this triangle. It could be epic. This is a very strong Lux algo buy signal. Normally, after these signals, you get some kind of consolidation before it can try to take off again. Solana on a 4-hour chart. We're waiting. Lux algo is drawing this triangle, and Solana keeps banging down on the bottom of it. A lot of sell volume up here in Solana, whatever. Zcash on a daily chart, stuck in this kind of pennant formation. Like, I guess the new number in Zcash, if you saw it, would be 400. If you saw Zcash at 400, like, that might be the juicy buy. If you saw it. We'll go to the 1-hour chart of Zcash just for instructional purposes, if there's anything there to see. I love these downward sloping triangles, and I hope it can stay in there. You don't have any alpha intelligence signals yet, but it is a completed 5-wave move. Lux algo is not impressed. It's kind of selling it. I did want to look at MicroStrategy just to see if Alpha Intelligence said anything about it. Nothing on the 1-hour chart. Let's see if there's anything on the daily chart. I'm dying for some kind of signal in one of these things that everyone hates. Everyone hates MicroStrategy when the big tech companies are all doing the same thing. They're going to sell stock. They're going to sell bonds. They're going to sell whatever they can to get as much money as they can to do what they believe in. CryptoBit says might be waiting until 2029 for the market to wash out traders and build up liquidity to pump. Dude, if we got to wait until 2029 for something to happen in crypto, I don't know. It's like it'll disappear. I can't believe, how does it wait that long when the banks want in now? But I mean, maybe it's 2029 before you have Skynet and robots, to the point where all this borrowing is justified. Maybe that's the way. It took 10 years for the internet to get from the dot-com bubble to the iPhone. And really, that was 2015. So maybe it'll take the hyperscalers 5 years. Look at Kospi. Somebody's saying this is hopium. The hopium was in Kospi, in chips, because it was going up forever, right? Wrong. Bottom signal, torched. Bottom signal, torched. Pivot points, that's what I call these things. If it holds above it, it's good. If it goes below it, it's no good. Kospi down 5% again tonight. I mean, this is an absolute total crash over there in chips. It's a crash. I understand that they need chips. I understand that demand is insatiable as long as they can get the financing. I mean, you know, the American semiconductor companies are on support, but this doesn't look like a disaster. Kospi looks like a massive retail liquidation because it's driven by only 2 stocks. This doesn't look terrible. And you know what? If it is hopium, you know what? Hopium is okay. It is. Like NASDAQ. This is NASDAQ daily. There are a lot of buy signals here. It's funny, right? I mean, I don't know where the last cluster of big buy signals was in NASDAQ. I haven't gone through everything in Alpha Intelligence yet, but it's funny. Like, for example, like if NASDAQ bounces, I think crypto smokes higher. If these signals turn out to be false, crypto will go lower. How much lower? Like, what do you think? Do you think Bitcoin's going to 50K? Do you think it's going to 40K? I mean, I guess if you had a 25% decline in NASDAQ because the Fed hikes rates, sure. But why would that happen? Why? I mean, that would be policy era. Fed hiking rates, $200 oil. I think it's very clear that the way the news is presented to us is a manipulation. There isn't, even if you think I'm full of it, there is no difference between what Saylor is doing and what the hyperscalers are doing. None. Michael Saylor made up some new math because he has to kind of market himself, whereas characters like Meta can just put the balance sheet off, put the debt in off-balance sheet places and hope analysts don't care because the stock is up only. That's all. We don't have to give it a fancy name. We can just stick it somewhere. We can put it in take the debt and stick it in an insurance company or a 401k where nobody ever has to sell it. And we can market wherever we want to market, even though we can't sell it. That's what's happening. In other words, you know what the debt's really worth in some of these cases with these private credit instruments? 0 or 10 cents on the dollar because they could never offload it. They could never sell it. And some of this hyperscaler debt could be the same way. At least Michael Saylor has an organized market for his Bitcoin. He has an organized market. He has liquidity. Do you have liquidity in hyperscaler debt? Oh, I can tell you right now, hell no, you don't. Hell no. So everyone's like, oh, crypto's terrible and it's going down and it's never going up again in our lifetime. And the old guy's hopium. No, it's not. It's not hopium because you know what? The machines are not going to announce their intentions. They're not going to announce their arrival. You're going to just wake up one day and you'll be like, why is this layer 1 up 600%? It's already happening. Like, you get these AI coins that pop off dramatically. These DEX coins, small caps. Now, do they stay up in this environment? Not always, right? There are deep retracements, but that's going to be the game. And some of this stuff is going to go up and stay up. Raoul Pal thinks it's suey. Raoul Pal's got a $3,000 outfit standing behind a big lit suey logo. Very nice. I would love to get that kind of deal. I would love that, especially if it's something I believed in. He believes in that project. Is that hopium? Like when you see Raoul Pal standing with the Sui logo behind him, is that nonsense or is it thought leadership? Now we're giving you thought leadership plus TA, okay, plus coin picks. That's what's in Patreon. That's what's in the YouTube member area. And all 800 people, we got 837 people in the free Patreon area. And we got them decent content this week with a 14-minute clip of a video of me and Toby doing her thought leadership thing. So everybody got content. And you know what? Like I said, if you're out there and you join there's a join button, there's a $ button at the bottom of the chat. There's a link down below. If you went to the YouTube member area and you joined and all you had was $4.95 and you got to play around with some emojis and you helped support the channel, needless to say, we would appreciate your business. We would appreciate your support. Like there's a famous political guy, you know, he has a $15 a month thing where, you know, I don't know, you can see all of his videos for his whole life. Okay, we have Patreon. We have stuff that you can do in there. We have ways for you to get research, or you can auto super chat us $5 a month and get in a cool emoji next to your name and access to emojis to use in the chat. We give you some fun so we can provide you with good research, paid and free. I don't mind telling you, because I love you guys. I love you guys. The PowerPoint and the stuff for this stream took 4 hours to develop because we have a market that's not moving, right? So if the market's moving, I can just turn this thing on and talk. But when it's not moving, it takes more time, which I'm happy to spend for you. So if you want to hit the like button or subscribe to something for $4.95, I'm not shilling suey, but you know, maybe you could try an emoji. So maybe I can get there one day. Or if I don't get there, the person who really deserves to get there is Toby, along with the dump truck full of money for Eagle King, who pushes the button to bring you the show. More than one button, by the way. Okay, ladies and gentlemen, that is the market update for today. Don't forget to hit the like button on the way out. And don't forget to believe in crypto. We will see you next time.